Hello, my name is Steve Bigelow with the Candlestick Forum. Want to show the indicator or the confirming indicator with candlestick analysis that allows you to make consistent profits uh, even when you don't have a consistently moving market. A lot of people will say to me, I have a problem. I can make some good trades, but while my good trades are working, I've got bad trades going on. And what I usually tell people is if you just use the chart patterns and the confirming indicators, what you do is you dramatically revamp your trading strategy to where a high probability or a high profit number of trades are going to be working consistently without getting whipsawed in and out. And this was illustrated yesterday. Notice when they opened the market yesterday, they took it right up. But what was the final indicator that told us that this was not a reversal signal? Basically, they could not close above the T line. Whoops. The T line is this 8 exponential moving average. Even the NASDAQ, or not even the NASDAQ traded very positive yesterday, but there was one final indicator that told us there wasn't a reversal going on. Even though this could have been a strong reversal signal, there were two things that told us you shouldn't cover your short positions just yet. One, they didn't close above the T line. And two, notice your stochastics. We're not telling you you're in the oversold area yet. That told you watch to see what they do the next day. Now, there was lots of positions that were short positions that popped up. Now, was that an indication that it was time to cover the short positions? Same scenario. When a short position was trading positive, there still was not a confirmation of closing above the T line. This type of information is what produces a much greater probability that you maintain your profitable trades without getting whipsawed out of them and eliminating trades that didn't work. We had one short position, ON, that actually did close above the T line. We closed that short position out because the probability factor went dramatically against you, because that probability factor is the T line, the 8 exponential moving average, which basically says if you see a buy signal and a close above the T line, the probabilities have gone against you going in the other direction. As you can see what happened on Borg Warner today with the market opening down because of the CPI numbers, we're still in a downtrend. We recommended going short on Guild because look at the J-hook pattern using the T line as a resistance level and then starting wave 3 to the downside. The reason we keep pointing out these indicators is that if investor sentiment is built into the candlestick signals, telling you exactly what's going on as far as the buyers and sellers, and the T line acts as a natural support and resistance level of human nature, you dramatically improve your probabilities of when the next pattern is setting up and being in the right direction on that trade. So we recommended going short on Etsy. Look at kind of the evening star signal, failure right here at the 50-day moving average area. And then they've done what we call a double doji. They took it down, they took it up, consolidated, and took it down. This becomes an extremely high probability short trade with the expectation they could probably be coming all the way back down to this level, or what everybody else can see, that you're in a downtrend, you could be heading all the way down into this area. Add the valuation that your stochastics are heading down, that just improves the probabilities that this is in a downtrend. Same scenario on our short recommendation on Rocket. Look at your bearish kicker signal. The bearish kicker signal is one of your strongest sell signals. It tells you the investor sentiment is kicked in this direction with great enthusiasm. And notice what the strength of this was yesterday when the market was trading up 500 points or so. They couldn't move this up from where they opened it. It closed right where it opened. Another indication of the strength of a candlestick sell signal. Same scenario on the buy side. Anytime we can evaluate where we've got a pattern, like a J-hook fry pan bottom that's staying above the T-line, notice what happens every time they open it below the T-line. They wipe out sellers and come back up above the T-line. What does that indicate? That they're taking out the sellers, so any buying has less sellers in front of them. And notice what this one was doing when the market was selling off. The patterns work extremely well with good confirmation based upon the T-line that the bulls are in control in spite of what the overall market is doing. So whether you're buying a pattern with indications that the bulls are definitely staying in control using the T-line as support, or you're using signals that tell you, again, there's been a dramatic change of investor sentiment kicked in the other direction. Once again, look at the result of what our bullish trade on EVH is doing, even when the market was selling off. Not only could they not close back below the T-line, they can't even close back below the 3T line, which is a stronger indication the bulls are in control. So this is not rocket science. If you just use the information that is built into candlestick signals, which we've got in the books that I've written, if you want to get a good general background of what's going on in the best patterns and signals and how to keep your emotions out of your trading, read the books. But even more importantly, or more constructive, is on March 26th and 27th, we're going to be doing a 2-day training. These last all day long. Start on Saturday morning, go well into the afternoon, start on Sunday morning, going well in the afternoon. And the benefit of these trades are that if you're having troubles making consistent profits and being able to analyze what a price move or what the market move is doing to put all your stars in alignment, we go from A to Z. We start with the 12 major signals. We go into the high profit candlestick patterns. We go into the top rank signals and patterns, which is a combination of the signals and patterns. Your improved trade probabilities by good entry strategies, profit-taking exit strategies, where to set your stops, how to scan for the best possible trades, how to use gaps to greatly enhance your returns on a trade. All the aspects of candlestick analysis, which is merely common sense put into a graphic depiction, when we go through it in a chronological order, your whole perception changes as far as what makes for profitable trading. That'll be it. We'll see you in the chat rooms.